Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, yesterday, sitting on a panel in Canberra on Monday morning, it was the RBA Phil Lowe, as he said he doesn't really understand why the same investors who are betting on central banks cutting interest rates are also driving the share market to record highs. He said, to me, it's a strange world. Lowe was looking at there are investors who think the outlook is significantly weak and that they expect the central bank right around the world to cut interest rates, but they are not worried about corporate profits or credit risk. I don't really understand, he went on to say. Nevertheless, from looking at the technical point though, the Aussie has found a bit of a footing as it now trades briefly towards the top side of the range, which came in roughly today at 69.72. It is assessed that the market is struggling at these levels, and I do believe that as we approach 70 cents or where the 60-day moving average comes in at 69.97, the bears are still at hand and should push the market back towards 25 or down towards 69.10 and reassess from there as a break beneath there re-establishes the downside objective, which is at 68 cents. The euro maintains a bullish stance as the US dollar weakens slightly further overnight and posts on the index a low of 95.44, a fresh 3-month low. Hasn't broken 95.40. Until we get that break, I'd see the markets at the top side of the range for the euro and the bottom side of the range for the US dollar. Although a break of 95.40 on the index would see the US dollar plummet nearly 100 points, around 94.40.60. This in terms would see the euro rally onto 114.60. But at this stage, my stop's still intact at 114.22, and while remaining, still holds the view down towards 113.65 to 112 region. Well, after trading 2 weeks in a sideways pattern, you can see that dollar yen, after taking out the level of 107.85, has only posted one bearish candle. Now we've got a doji and slightly a consolidation pattern above the level that I'm calling at 106.60.75. It is ascertained the market should trade towards that level and reassess from there. Any advances should find a cap around 107.55. Well, the pound still seems to be capped by the resistance of 127.60. After overnight, UK Parliament is ready to support a no-deal Brexit, as Johnson argues. The British pound traded very choppily overnight, in and out of small gains and losses, and at present still contained by the resistance of 127.60, as I mentioned. With the up-and-coming G20 summit with President Donald Trump and Chinese President Xi waiting to see what comes out from there, Boris Johnson said in a speech yesterday that he believed the British Parliament would now support a no-deal Brexit, even as senior figures in Conservative Party warned that they have had the numbers to stop him if he tried to push one through. Johnson, a former Foreign Secretary and the favourite so far to succeed Theresa May as Prime Minister, used a BBC interview to argue that the dribblings that both from his Conservative Party and Opposition Leader Party received in the European election had left members of Parliament determined to get Brexit done. He said, I think Parliament now understands that British people want us to come out. Johnson said, I think that the MPs on both sides of the House also understand that they will face mortal retribution from the electorate unless we get on and do it. Still, until we get a break, which I do favour at this stage of 127.60, could see a move up to 128.40 as an opportunity to sell. Support at this stage at 126.70. Gold is still not backing down and reaches its objective of 1,425. From the challenge, we are extremely overbought. Nevertheless, the market hasn't broke that level to take it higher. And at this stage, I still expect to see this level maybe cap in the short term and could see a pullback towards 1,390 to get us out of this overbought situation. And wrapping up with oil for the market at this stage, Still pressure in this level of 58. I believe the market will break through this level and possibly rally on towards $62 as a target. Support seen at 56.50. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday poll, and I hope you enjoy this great start to the new day.